Sorry, I was on Tinder right there. I wasn't paying attention.
Were you? Oh, you not our time?
No, I was not on Tinder. But investors will have a chance to own a piece of Tinder in this deal. Like, of course, they can own it right now by owning IAC. But interesting that IAC is taking these businesses, which they lumped together about 18 months ago, and packaged them into an IPO they intend to offer this fall. And I think that one of the reasons the stock is up is that investors recognize that this will probably get a bigger valuation as a separate company, principally because of the characteristics of this business.
But, Cory, you just mentioned it's only been a year and a half, right?
Yeah.
So talk to us about the timing of this thing.
So they've put them together long enough to sort of see what the track record is like of these businesses as a reportable unit. What we've seen is a business that's growing really fast. It's also a really big business. I mean, it may surprise you, but you're looking at a business that's doing, well over $200 million in revenues in the last quarter, $239 million last quarter, but growing at a pretty good clip on year-over-year basis. I mean, you're looking at a $1 billion a year top-line business. And in terms of the growth, they come here often. That was actually Carol Masters' idea. Yes, but that is indeed the year-over-year growth rate. You saw that came off a little bit last quarter. Interestingly, though, in the last quarter of this company, they have been investing in these businesses big time. So gross margins have actually, or operating margins, I should say, have declined substantially in this business, particularly in the last quarter. Some of that was currency as a big foreign business as well. But you can see that only 11% gross margins because they really are investing to grow these businesses. Perhaps the idea that IPO, they want to have that rapid growth into the IPO.
Well, maybe rapid growth, but shrinking margins. Do you think this is the right time to go public?
I think the last quarter they're going to have something to prove here in the next couple quarters they report before the IPO.
Yeah.
But surely they're going to make the case that that was a one-time thing. I mean, 30% gross margins on a trailing basis, 29, 30% gross margins. That's an enormously profitable business at scale with, as I mentioned, over $1 billion in revenues. And as we know, Tinder is really doing fantastically and within that growing really quickly.
We giggle up here about this, but just from a purely business standpoint, what makes these sites so popular?
Well, I mean, it's
you got to meet people.
Yeah, people got to meet people. I mean,
I'm talking about from a business standpoint.
Old school,
not from I'm going to meet people.
In our era, kids like this, they she can meet all the people she wants to meet. But what are the options out there, right?
Yeah.
Go get hammered in a bar and meet somebody at work.
What is this?
These are bad plans.
All right, leaving aside, I mean, millions and millions of people are on Match.com. I think it's pretty obvious why people.
Yeah, I think last quarter the number of people using their services was 4 million people last quarter.
That's a lot. What's left of IAC without the dating websites? What does it mean for their valuation?
They have some interesting businesses. They've got a search business in Ask.com. They've got Answers.com. They've got it's Barry Diller, man. So he's got like all kinds of random businesses all cobbled together there. But these dating things as a separate business, I think that the recognition of the company is that this will get a higher valuation because it's got those fantastic gross margins, it's got really nice steady growth, and it's doing it at size.
Is this going to push some of these other sites to maybe marry, if you will?
Really?
I like that.
I couldn't help it.
That was really clever, Mark Crumpton.
Thank you very much.
I think that it may indeed give them some currency to do more acquisitions going down the line. I think one of the interesting things about this is that they've got some economies of scale with the way they run the businesses on the back end, but they're marketed to very different groups of people on the front end, and that's why you have these different brands altogether.
Wow, Bloomberg Media Editor-at-Large Cory Johnson talking about dating sites.
Why not?
Why not?